Hi everyone, if you could please move to chapter number 12 of your income tax, advanced taxation notes, chapter number 12, residence. So far we have been looking at income tax and different aspects. We know how to make the income tax pro forma, we know what comes in the income tax pro forma, we have seen in enough details all of the things which come in the income tax pro forma. So why would we be making the income tax pro forma? Because we know we have to calculate the income tax, we have to pay the income tax. For whom we will be making the income tax pro forma? We will be making the income tax pro forma for the taxpayer. Who would be the taxpayer? Someone living in United States, will that be a UK taxpayer? Someone living in India, will that be paying UK tax? So these are the questions which will be answered in this chapter, which is known as UK residence. Now resident simply means living in any country. So if you are a resident in UK, you means you are living in resident. If you're resident in India, you are living in India, right? Now for tax purposes, resident means living for a specific period of time. So if you are resident in any country, you might be paying UK tax. So if you are resident in UK, say for example, you might be paying UK tax. Right? Now how to determine if you are resident in the UK or you are resident overseas? So for this tax purposes, for UK tax purposes, we will be seeing that either you will be UK resident or you will be overseas resident. So there are only two scenarios. So either you are UK resident or UK non-resident. Non-resident means overseas resident, right? So there are few tests which we will study which will determine if you are UK non-resident or UK resident. UK non-resident means you are overseas resident. Right then, if you come to page number 43 of your lecture notes. Now this is chapter number 12 of your P6. Chapter number 12 of your P6 lecture notes. Right then, a person is liable to UK tax if he is resident in the UK for a given tax year. To define whether a person is resident in the particular tax year or not, the following rules will apply. Now first we will see the rules about automatic tests. Right then, so first of all we will look at the automatic tests, and in automatic tests, as I said, there could be two possibilities. Either you could be UK resident or you could be overseas resident, which means non-UK resident. So first of all we will see automatic non-resident test. So which means automatically, if these rules apply, you will be considered automatically non-UK resident. So what are these rules? The following people will automatically be treated as non-resident in the UK. Now someone who spent less than 16 days during a tax year, doesn't matter how many days he spent last year, doesn't matter whether he was resident in the UK last year or not. If he spent less than 16 days in a year, if he, say for example, came on a couple of weeks visit, he will be considered non-resident. And of course, if he is considered non-resident, it means he won't be paying UK tax. And the second test says, a person who is in the UK for less than 46 days during a tax year and who has not been resident during the 3 previous tax years. So there are a couple of things in here. You have spent less than 46 days and you have not been resident in the previous 3 tax years. So what was different in the previous criteria? Previous criteria was only 16 days. Doesn't matter if you were previously resident or not. However, in this one, you have spent 46 days or less than that in the UK, but you must not be resident in the previous 3 tax years. And after that it says, last one, a person who works full-time overseas, if you work full-time overseas, subject to them not being in the UK for more than 90 days. So you work full-time overseas and you are not in the UK for 90 days or more than that, you will be considered automatic resident, automatic and non-UK resident, then you won't be paying any UK tax. So someone who fulfills any of these criteria, it will be considered as non-UK resident and he won't be paying any UK tax. Now we will see the tests which apply to the UK residents. Someone who is fulfilling any of these criteria will be considered UK resident and he will be paying UK tax eventually. So what is this criteria? Automatic resident test. Subject to not meeting any of the automatic non-resident tests, so we assume that the person has not met any of the automatic non-resident tests, only then we will move to our automatic resident test. So first we have to determine if the automatic non-resident test apply or not. Assuming that automatic non-resident test does not apply, we will then move to automatic resident test. So what are automatic resident tests? A person who is in the UK for 183 days or more during a tax year So it's a substantial amount of time, almost 6 months. So if you have spent 183 days during a tax year in the UK, you will automatically be considered UK resident and you will be paying UK tax. A person whose only home is in the UK, which means he does not have any home in anywhere in the world, only home is in the UK, he will be considered UK resident and he will be subject to UK tax on his income. A person who carries out full-time work in the UK, if you are working full-time in the UK, then you will also be considered, in this case as well, you will be considered UK resident and you will be paying UK tax. Now, someone who does not fulfill any of the automatic non-resident and resident tests, say for example, someone who is fulfilling a criteria, who is not fulfilling any of the criteria of automatic resident test and automatic non-resident test, then we will have to see more details. Now, more detail is sufficient ties test, UK ties test as well, known as UK ties test as well. So there are some criteria which tells us that how many connections the person has with the UK. More connections he has with the UK, chances are he will be considered UK resident. So ties simply means connections. So someone who has more UK ties, more connections with the UK, he will be considered UK resident. Someone who has not, who hasn't got any connections with the UK, or who has got less connection with the UK, chances are he will be considered non-UK resident. Now that is one criteria. Other criteria along with this is that someone who has more connections with the UK and who is also spent some days in the UK. So if you spend more days in the UK, you need less connections to be considered UK resident. If you spend more days in the UK, you need least amount of connections with the UK in order to be considered UK resident. If you spend less days in the UK, you need more connections in the UK to be considered as UK resident. And these connections are known as UK ties test. Now what are those connections? There are 5 connections. The list is given below. Now what are these connections? Having a close family member, a spouse, civil partner or a minor child in the UK. So if you have any close family member in the UK, then that is one tie, that is one connection. Having a house in the UK which is made use of at least 90 days during the year. Now the house must be available for 90 days and you have used that house whatever days. So if the house is available for him and you have the house and that house is available for you, then that is another tie. And now the condition does not mean that if the person has got another house in Germany, say for example, and one house in the UK, it doesn't matter. Only thing is that you must have the house in the UK and you have used that house. That house was available for you for 90 days and you have used it for a couple of days. And then after that it says doing substantial work in the UK. Substantial work means you have worked for 40 days or more in the UK. So if you have fulfilled that criteria, that is another tie. So these are the connections. As I said earlier as well, more days you spend in the UK, you will need less connections, you will need less ties. Now how many ties you need and how many days you have spent, we will see in a minute. Right, then after that it says that being in the UK for more than 90 days during either of the previous tax years. Now if you have been in the UK in either of the previous 2 tax years and you have spent 90 days in the UK, that is another connection as well. And the last one is spending more time in the UK than in any other country. If your job is like you're always flying to other countries, so you are hardly in any country, but you spend more days in the UK than in any other country, it means you are having another connection with the UK, you have another tie. And there's a funny rule with regards to UK taxation. A day in the UK is a day when you are present at midnight, which means at 12 a.m. Say for example, if I come to UK, say for example at 1 in the morning, 1 a.m., if I arrive at 1 a.m. and then I attend the meeting in the morning, then I leave at 8 p.m. For tax purposes, I haven't been to UK, not even for 1 day. So for tax purposes, I never came to UK. So that is a bit funny rule. So someone who is present at 12 a.m. will be considered 1 day. Right? So if you arrive in the UK after 12 a.m. and leave before 12 a.m. next day, you will be considered you haven't even visited UK. Right then, so this is a table which will be given to you in the exam. which you can see on your screen. So this table will be given to you in the exam, which tells us that how many days you need and how many ties you need in order to be considered a UK resident. And these days will vary if you were previously resident in the UK or previously non-resident, right? So first of all, it says days in the UK. If you've spent less than 16 days, doesn't matter if you're previously resident or not, because you will be considered automatically non-resident. We have seen it when we started this chapter. So first automatic non-resident test excuse me. So first automatic non-resident test tells us if you have spent less than 16 days, doesn't matter you're previously resident or not, you will be automatically non-resident. So that's what it says in the table as well. And if you see last one in this table, it says if you have spent 183 days or more, it doesn't matter if you're previously resident or not, you will be automatically UK resident. And we have seen this in our automatic UK resident test. Now only difficult things is the ones which are in between those. So if they are 16 to 45 days and you were previously resident, then you will need 4 UK ties in order to be considered UK resident. However, if you are not previously resident, then you will be automatically non-resident. Now this is also mentioned in our automatic non-resident test. So if you have spent if you have spent 16 to 45 days, which means less than 45 days, and you were not previously resident, you will be automatically non-resident, right? Likewise, in the next one, it says if you have spent 46 to 90 days and you were previously resident, you need 3 ties or more in order to be considered UK resident. And in the case of not previously resident, then you will need 4 UK ties. Likewise, they are different, but good news is this table will be given to you in the exam. What you need to memorize is UK ties only. What is a UK tie? Family connection in the UK is a UK tie. Having a house in the UK which is made use of a UK tie. Likewise, there are 5 in total, right? And the next one after that is domicile. Now normally you get the domicile with your parent, so you will get the domicile with your father. So wherever your father has got the domicile, you will automatically get the domicile of that. However, you can get the domicile by choice as well if you migrate from one country to another. Say for example, someone living in India is migrated from India to UK, he can have a choice to be UK domiciled, right? Now domicile simply means you are national of that country, whereas resident means you are living in that country. You might be national of any other country, right? Now I have made the table on the board, which you can note down later as well. But on the table, which I have made on the board, that's exactly the same table is given to you in the notes as well, on the same page which I have shared you through the screen. Now this table I have presented on the board. Please make sure you note down this table. Now first one, it says resident, then domicile, and then income in the UK and overseas income or income outside UK. Now if you are resident and you are domiciled as well, someone who is UK national and living in the UK, they will have to pay tax on the UK income and on the overseas income whenever it arises, right? So wherever and whenever it arises. Arising basis means, so whenever income is arising, whenever you're earning that income, you will have to pay tax then, right? So someone who is resident and domiciled, they will have to pay tax in the UK and overseas as well. And please remember, income tax in the UK will always be payable. So if you have any income, income tax means if you are earning any income. So if you're earning any income in the UK, it will always be on a rising basis. Doesn't matter if you're resident, non-resident, domiciled or whatever. If you are earning anything in the anything in the UK, that will always be taxable on a rising basis. Whenever it arises, you will have to pay tax then, right? Now first one was you are resident and domiciled. So if you're resident and domiciled, doesn't matter it is income in the UK or overseas income, it will always be taxable on a rising basis. The second scenario tells me you are resident in the UK but you are not domiciled in the UK. Now if I say for example live in the UK but I'm not a national of United Kingdom, then this is my scenario. I'm living in the UK but I'm not UK national. So I'm resident but I'm not domiciled. So in my scenario, what will happen that although, as I said earlier as well, income in the UK will always be taxable, doesn't matter what happens. But the overseas income, excuse me, overseas income will be on a rising basis, but I might choose remittance basis. Now, what is remittance basis? Remittance basis means whatever income I remit in the UK, whatever income I bring in the UK, I will only have to pay tax on that amount, right? So whatever amount I bring in the UK, I have to pay tax on that amount. Now, remittance basis could be available in two ways. One is automatic remittance basis, and other one is which is claimed. Now, when you claim, it is not good for you, right? So the overseas income will be on a rising basis unless I have a remittance basis automatically available or I claim remittance basis, right? So chances are I will be claiming or I will have the remittance basis. So in that case, it will be remittance basis. Otherwise, it will be on a rising basis. A rising basis simply means it will be available, it will be taxable on all the income. Remittance basis simply means amount I remit in the UK, I only have to pay tax on that amount, right? Now, as I said earlier as well, remittance basis is either automatically available or it can be claimed. Now, let's see the difference between these two as well. Now, first of all, what is remittance basis? It tells us below. What is remittance basis? Now, I've already told you what the remittance basis is, and below that it says that automatic application of remittance basis. So when would the automatic application of remittance basis apply? If an individual who is UK resident but not UK domiciled and has unremitted non-UK income and gains of less than £2,000 arising in the tax year, the remittance basis apply to that year without any claim being made. So if you have less than £2,000 of unremitted non-UK income, then the automatic remittance basis will apply. But please make sure you read this rule clearly. It is less than £2,000 and it is unremitted, which means you will be keeping less than £2,000 overseas, right? So it is less than £2,000 and it is unremitted non-UK income and gains. So if you have unremitted non-UK income and gains of less than £2,000, then remittance basis will automatically apply. And if it automatically applies, you will get the full personal allowance and full personal allowance for capital gains tax purposes as well. Now, capital gains tax is another tax which we will study later, but capital gains tax is also capital gains tax also gets another personal allowance. So one personal allowance is for income tax purposes, but there is another annual exemption for capital gains tax purposes as well. So if remittance basis automatically apply, you will get the full personal allowance and you will get the full capital gains tax annual exemption. But if you claim the remittance basis, then you will not get the personal allowance and you will also not get the capital gains tax annual exemption. So that is the bad thing if you claim the remittance basis. And on top of that, you will also have to pay remittance basis surcharge. Now, what is remittance basis charge? I will just show you in a minute. Now, that is remittance basis charge. So an individual who claims, just bear me 1 second, an individual who claims a remittance basis, an individual who claims the remittance basis and is a long-term resident is required to pay the remittance basis charge. So if you have been living in the UK in the from the 7 out of the 9 previous years, then you will have to pay the remittance basis charge. So you are living for quite some time. So you are living for 7 years out of the last 9 years in the UK, then remittance basis charge is going to be £30,000. However, if you have been resident in the UK from the last 12 years out of the last 14 years, then it will be double than that, which is £60,000, and it could go up to £90,000 if you have been resident from the last 17 years out of 20 years. Now, this last rule is not given to us in the notes, but this will be given. So remittance basis charge amount of £30,000 if you're a resident from the last 7 out of the 9 years. It is £60,000 if you have been resident from the last 12 out of the 14 years, and it is £90,000 if you have been resident out of the 17 out of total 20 last years. all of these remittance basis charge will be given to you in the exam paper in the tax allowances section. All right, so you do not have to memorize this stuff. It will be given to you in the exam, right? However, you will have to memorize what the remittance basis charge is. It will earn you some marks. And after that, it says the individual is required to nominate unremitted non-UK income and gains against which the remittance basis charge applies. And in each tax year, the individual can choose whether or not to claim the remittance basis charge. Right? Now you will have to reread this chapter again until we have covered it, because there's a lot of stuff going on, a lot of stuff I have covered so far. And if you want to note down this stuff as well, although it is already given to you in the lecture notes, but just in case if you want to note down, it is always a better idea. Now in the last one, which I haven't told you yet, if you're not UK resident and you are not UK domiciled, although the overseas income, you will not have to pay any UK tax. However, if you have any income in the UK, as I said earlier as well, UK income will always be on a rising basis. It doesn't matter you are domiciled or resident or not, it will always be taxable. Right? So that's it for this video. I will see you in the next video, and we will do a question on our residence. Right? So whatever we have covered so far, please make sure you revise it. And after revising, when you are comfortable with it, when you know everything about these rules, automatic non-resident, automatic resident, UK ties, remittance basis, remittance charges, so all of these, when you are comfortable with it, come back and watch the next lecture where we will be doing the practice question, which is a past exam paper relevant to this topic. I will see you in the next video. Goodbye.